So where are we going from here? Let's ask our market pros. We got trader Alan Uckman over at the CME and Melissa Armo with the stock swoosh. Melissa, last time you were here, you were very optimistic about the state of things despite the volatility and said that a lot of that volatility was overdone. Do you think that that's still the case?
Yes, and look how we rallied. I was right. December 26th was the last time we were near the lows, and really now we're only 3% off the high. So the stock swoosh tip of the day is follow the trend. We never broke the uptrend, even when we sold off in December, and people got out. And now guess what? If we get a trade deal done anytime in 2019, we could make new highs again and hit over that 27,000 number, that number that's looming out there that the Dow got close to and didn't get over yet. All
right, we should point out you're saying the Dow is within 3% of those highs reached back in September. The S&P close to that. Alan Uckman, one of the things that's interesting when I was looking about the advance early this year, because it's still relatively early in the year, is you have everyone going along for the ride. Industrials and the industrial sector up 17% year to date. Energy up 14%. Technology 13%. I could go on and on about the S&P 500 companies themselves, most of whom are now trading above their 50-day moving averages. Geniuses like you guys follow that stuff closely. What do you make of what the underpinnings look like?
Well, like you say, it is a broad bounce, and I want to build on what you said on the open. It's not only been a good couple of weeks, it's been a good month and a good 2019. We're 20% off those lows from December in the Dow, the S&P, and the NASDAQ. So it's been a complete reversal, and there's more upside potential here. Now, I think the catalyst Ashley referred to, we talked about a couple months back, if you remember in the other pit, we were talking about how the markets were forecasting no interest rate hikes in all of 2019. When that commentary came out, since that time, the market's been in rally mode. If you look at the S&P, the broad market in general, that's our barometer. The S&P had a 600-point drop. If you add that 600 points, if we do get up to the top, we have a full V recovery. That target's 3,500, which is 30% above. So there's still a lot more upside. So odds are that we could do what we've done every time in history, where we've sold off and we bounced back and made new highs.
Melissa, I am cognizant of what happened to Kraft Heinz, losing a quarter of its market value today. Very unique circumstances. I understand that, a huge write-down, problems getting the Kraft and Oscar Mayer businesses in sync and all of that. I get that. But does it say anything to you about basic staples and consumer resistance, or is this a Kraft Heinz unique development?
I think it's a Kraft Heinz unique development. That stock gapped down and just tanked today. It was just fell off a planet. But I will say one thing. When you look at the overall market and you look at the tech sector, which has been leading the way 2016, 2017, 2018, like Apple, for example, which is one of the strongest stocks in the market, Apple doesn't look that great. So let's just say tech comes and goes and makes new highs and starts to look strong again this year. You're going to see the market take off like a rocket, because really the market right now is the overall market. I'm saying the market ETFs. I'm saying the SPY, which is the S&P ETF. I'm saying the diamonds, which is the Dow ETF. Those look stronger than specific stocks, which is very unusual, Neil. It's very unusual.
That is unusual. No, you're right about that. You know, another thing that's finally happening, Alan, and I don't know how free you are to talk about some of these specific examples, but the delayed IPOs, initial public offerings from companies that were stymied by the government shutdown, they couldn't be written off by the Securities and Exchange Commission. Now they're on again. So you have Pinterest coming to market, Lyft coming to market. These are going to be tens of billions of dollar offerings here, and more to come. What do you think?
Yeah, and it's all about timing, like everything else. So sometimes it gets skittish when the markets are stalled out. Let's see what happens with the dollar. I think that's interesting. As we talked about interest rates, if the dollar doesn't have any rate hikes, it's hard for the dollar to rise. So I think that could be another wind at the market's back. But we've shifted sentiment. We went from wall of worry to now slope of hope. So let's see where we go. And you've seen every time the market sells off even a little bit, it bounces right back. So we've changed course as far as the mentality of the markets, and look for this to continue. We've still got some very, very strong trends, and I think people are starting to appreciate what the fundamentals of the markets are, as opposed to so much politics and policy.
I just want to caution one thing really quick, Neil, before we go.
Sure.
If Trump doesn't get a deal done by the next week of that deadline, I don't want people to panic again because we've had a long ride up here since December. We could have some volatility if a deal doesn't get done. The market is thinking a deal is going to get done by this deadline 1 week from today.
Right.
And I'm saying if it doesn't, don't panic.
All right. I'm going to focus on the slope of hope. That's a new one. Guys, thank you both very, very much. There was another battle going on today. Take a look.
Will you